Oh, good afternoon, everybody. I'm exhausted. You guys can hear me okay, right? Cool, cool, cool. I assume that's a yes. Hopefully YouTube is good. Thank you very much. Yeah, I'm beat. Last couple of days, yesterday I traded from like 5:30 a.m. to like 7:30 p.m. Today started at like 5:30 also. It's a lot. Uh, Feeling it a little bit. And today, whatever, let me do the disclosure. I am an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. The position disclosure, I'm out of coin short, but I am short now BITX. Small. I covered, I got the move I was looking for mainly intraday today. So I covered the vast majority of it. Just have a little bit, still have a little bit of Tesla, still have some Palantir. Um, oh, Josh, why don't you do the afternoon meeting? Oh, it shows up once every 5 months to do an afternoon meeting. Um, uh, Palantir, I actually have a similar short position on as I probably had last night, but I traded the absolute hell out of that stock today. Um, Yeah, so huh, I tell you the craziest thing about all of this, and it's not that crazy because we understand market dynamics, is seeing the spies unchanged at the end of the day. Spies are basically unchanged here at the end of the day. We had a little bit of an uptick after hours, and it shows us up 0.12%. I think we actually finished up like 30 cents on the day. The Qs are down, are unch, and that's including a little bit of a bounce after hours. They probably closed very small negative. Is Cisco up? Looks like it ticked up a little bit and came back down. And the IWM took the brunt of it, closing pretty much on lows, down 0.8% on the day. As maybe the market's starting to notice this TLT move and the interest rate move. Maybe the market's starting to notice this dollar move. I mean, the dollar index ETF move from October lows through where we are now is kind of getting insane. That's as we're seeing a headline hit right at the close. Green lights Einhorn boosts inflation bets after Trump win, or boosted inflation bets after Trump win. Um, so yeah, I mean the crazy thing I was just saying is this unchanged market. I feel like it was today wasn't an inside day, was it? Was it? Holy cow! Today was an inside day. I'm just noticing that for the first time. Um, Inside day and the spies, closing unchanged, but I'm exhausted because I feel like everything I'm looking at is moving crazy all over the place. And even the indexes, spies, Qs, like this QQQ move today was big. Yet spies are an inside day and everything closed unchanged. We ripped all the way down to about yesterday's low in the Qs, somewhat violently at that low, just to then go on this insane rip roaring rally where people are starting to speculate if we're going to break out to new highs in the daily charts, then just to roll all the way back down. And I was even thinking that when someone in the VTF was saying that the market looks like it's maybe trying to go after all time highs into this move that we had at 2 o'clock, and I was like, but positive gamma works both ways. For 7.5 billion of positive gamma, corporate buybacks only work one way. That's buying. But the gamma that we have, those gamma levels work both ways. They're mean reverting. So that's why the indexes are, the S&P is staying so unch. Yet it feels like the movements in some of these stocks that I'm trading, and maybe I'm trading the particularly crazy ones, but even some of the ones that I wasn't in, like I'm not trading Apple right now. Apple felt like it had a crazy upside move intraday today. Um, Nvidia seemed like it was all over the place. I didn't trade it at all today. Looking at the 5 minute chart, it looks a little bit tamer than I kind of thought it might be if I saw it. But I'm focused on trading Tesla. Tesla was wild. Was opening rip here up to 344 and change, then breaking yesterday's low, getting down to 322, and then it tightened up a little bit. Palantir was a big focus for me today. I traded a boatload of stock in Palantir today. Uh, so we can circle back on that one. These crypto names, some of their extension they have on the daily chart. I wasn't as aggressive on Coinbase today as I was the last couple days. Actually, I ended up covering my coin short again after hours yesterday when I got a little bit of a down move, and then it gapped up this morning. So I reshorted some stock, but I was so focused on the Palantir short that I didn't do it as big as the last couple of days. So I missed most of this down move. I was glad to see that some other people in the VTF, I think it was Pat, was really seemed like he was the ringleader there, really kind of picked this one up and pushed for this, opening momentum support break, and this thing just worked great all day. And the next thing I knew, after doing the brain trust thing with Sammy and JR, where we talked about BITX in it, I started shorting some of this BITX in the afternoon session, and then caught this down move, but it still kind of held up okay overall. Bitcoin, that is, Coinbase was weaker. So and then flip side of that, look at XLE today. Like XLE, big down move, bottoms out, insane up move. Oxy, we actually called out the dead low in Oxy. I wasn't watching it at all, but someone brought it up at Lowe's, and I saw this candle. I was like, oh, this looks like a long to me here. I didn't take it. But we also know this is where Warren Buffett is usually coming in and buying stock. I have a position in Chevron that I've been managing, which this thing had a big move today as well. So, I mean, and the IWM, really weak today. But this is what dispersion is. It's when you have this really large positive gamma in the market, it makes it difficult, but not impossible, for the indexes to give bigger moves. But what tends to happen is, if the SPY is just quenched and it's stuck and it can't move, and is going to end up being unchanged, but you got stocks all over the place. If Tesla is going to be down, and I don't, it wasn't today, but yesterday, just using it as an example, if Tesla's going to be down, 6% or 7% or 8% or whatever it was yesterday, and the S&P is going to be flat, and Tesla's in the S&P, then you have to have enough weighting of S&P stocks that are up to make it so that the S&P can still be relatively unchanged. And that's kind of what we're seeing. It's like, oh, Apple is relatively weak, right? It seemed like it was relatively weak on the daily. It was relatively weak pre-market. It was relatively weak off the open. But then if something else is going to start selling off, then maybe Apple needs to capture a bid, which it eventually did, in order to help the indexes be unchanged. It's just a really crazy market environment. But it seems like there's a ton of volatility underneath the surface, which I would say is notable, as we go into next week, which, we're still got a couple more days left on this week. But next week we should see a lot of that gamma roll off in the beginning of the week. I'm not sure how much, and that can then open the market up to bigger moves and increased correlation. So we'll see. The thing that I've been talking about from an index level now, to go over the daily charts, as we understand what what this gamma is doing to the market, is it would just make sense for us to go sideways for the rest of this week, more or less. That will satisfy all of the upside extension versus the ADMA on the daily chart. Then we loosen up for next week, and if we break out through 600 bucks, we could be set up for, real big technical continuation of the upside. The technicals of this market look super bullish, but in the same way, going back to the 5-minute chart, in the same way, it's difficult for us to sustain a breakdown. It's difficult for us to sustain a breakout until we get through this period. Everything tightens up. So we'll see. I kind of feel like, so, I'm bullish on the market. My general thought process, as I've discussed, is we build out a bull flag this week. We got more of that today. Time is a bull's friend. It lets these moving averages catch up, and that inherently will bring in more buying into the market over time, more technical buying. So my thesis has been that we flag out this week and then potentially give technical continuation next week. Uh, I've been saying that there's a lower probability chance that the one thing that could derail this market is a big move from the interest rates and the dollar. I think that the probability of that did increase a little bit. I would still say it's probably the less likely outcome into the end of this year. Um, uh, but I think that probability of interest rates derailing this market rally is increasing. I mean, and I'm not a genius to say that. It's the market telling me that. Look at what TLT did today. TLT, that's a nasty candle on TLT. We did not break the November 6th low, which is a big level that I'm watching. I'm watching a real break of that November 6th low, and I'm watching the 10-year to break 4.6%. That's kind of some triggers that I'm thinking of. But look at the dollar move here at the same time. So not Sammy, JR today in that podcast thing that we do brought up a really good point that it is possible for the market to continue higher even in a higher interest rate environment if the read through is that growth is so much stronger that it's able to outpace inflation and make it so that a higher interest rate doesn't matter. And that's definitely, I think, a really good point that we need to consider. So it's really just a matter of if the market really thinks that that's true, if the growth it really can be that big, the expectation of growth can be that big that it can overwhelm what the dollar is doing and what interest rates are doing. And so far, the answer to that has been yes. But I do still think that there is a potential breaking point. Because, like I was saying in yesterday's afternoon meeting, higher dollar at a certain point, I really think begins to negatively impact um, these Mag 7 names, these multinational companies. Higher interest rates negatively impacts your biotechs, your small caps, your mid caps. That is kind of both hitting at the same time here. So, we'll see. I mean, this continuation of the dollar again today is crazy. Um, you know, with that said, they're extending. So maybe as I'm having this afternoon meeting, this is a near-term top for the dollar, or we're close to a near-term top for the dollar, and it starts going sideways and stabilizes and satisfies some of that extension, and then the probability of it really negatively impacting the indexes becomes reduced again. But I'm a little bit nervous. Again, just to repeat myself, I'm not bearish on this market at this point. The technicals are super bullish. The buy flow, the forced buy flow is still there. It's super bullish. Positioning did increase overall, so that's something to take note of. So maybe we don't have the same degree of FOMO buying anymore. But there is still some forced um, CTA buying. There's probably some forced vol fund buying as we get these unchanged close that comes in, and obviously the forced corporate buybacks all at the same time. I really don't like to fight this time of the year to the short side. I know I have a little bit, just trying to satisfy extension on the market because sometimes I have to justify my trading rules versus my thought process, and that can be a little bit tricky sometimes. So I'm not coming out with a bear call, but at a certain point, and the IWM got hit today, it's notable what interest rates are beginning to do. With that said, the IWM didn't still none of these indexes have even touched the 80 MA on the daily chart. That's how extended we had become. So this could just be very simply part of the market extension correction, and in another day or two, a couple more trading sessions, we have fully satisfied that extension, and then maybe interest rates relax a little bit, the dollar relaxes a little bit. They could potentially become um, tailwinds instead of headwinds as the dollar pulls back right as the market's creating a pivot and we're bear bull flag continuation. So we'll monitor the situation day to day, but it was a big move in rates and it was a big move in the dollar today. It did negatively impact the Russell. The SPYs held in great. I really wonder sometimes what the market would look like if you didn't have, uh, you know, some of this underlying stuff that holds the market in place. Um, but the market held in really well. So yeah, so we'll see. Felt like an absolutely crazy day today, but we had some really good trades. Palantir was a big focus for me today. I have had some short overnight for some days here that has been hurting me. Obviously, though I've been I think managing the position all things considered decently well. And then today was the day where I finally saw a signal in this thing that told me to really go for it. I was swinging some short already, and then it gaps up really big. There was a headline out in Palantir that they renewed their contract with Rio Tinto, but I didn't find a contract renewal to be of really significant news personally, though sometimes the market's stronger than I am. But off the open this morning, we had weakness in like the Nvidias of the world and the Apples of the world and most of the Mag 7 stocks, but absolute rip higher in most of these names that have been going crazy. These crypto names, Tesla, Palantir, all those like, Trump trades that are super extended at this point absolutely ripped off the open. And the opening move here in this Palantir, I was like, oh my gosh, like I'm swinging it short. It just gapped up huge. I don't think that the news is that important, but look at this thing ripping in my face here in the beginning of the day. And I shorted some small on the way up. And then for me, it really started when I started watching this thing a lot closer. And I kind of talk down on tape reading. Um, a lot these days. And really that's mainly I feel like if you're a newer trader in the business, sometimes I get new traders who don't even know their left foot from their right foot yet when it comes to technical analysis, asking me about learning to read tape, and I tell them don't worry about the tape. The thing that I saw a lot of back on the trading desk, um, with newer traders is that they would get fascinated on level two and fascinated on the tape, and all it would do would cost them money. They'd be staring at this micro level two and trying to trade off of it, and there's just so much noise in the level two that it makes it very hard to read, I think, unless you have a lot of experience and a lot of skill reading tape. And I think that learning to read tape is one of the more difficult things in trading to learn. It might be like I actually think for the most part it's been a huge benefit to T3's traders to go remote. One spot where maybe that might not be true is in terms of learning to read tape. The way that I learned to read tape is first of all I started in a very different trading environment. I started in an environment where the tape itself was also easier to read because the algorithms were not as advanced as they are now. There was not as much noise in the tape. There was a lot more execution traders that were, trading large institutional orders who didn't know what they were doing, and you could just very easily read what they were doing. So, a lot of the way that I started to learn how to trade in the beginning was by trading off the tape, and I was surrounded. I had three really good tape readers who were like old school traders that sat around me, and I just listened to what they talked about, and I picked it up more and more and more over time. These days, I generally find that those skills are fairly useless because, like I said, there's so much noise in the tape. Every once in a while, though, I see something that can be really important, and that happened today in Palantir, and it honestly it made me a lot of money. This thing is absolutely ripping higher, and the first time it gets up to like 63 quarter, I just start seeing and it's hard to describe. And this is probably also one of the reasons why it's particularly difficult to learn how to read tape now because you have to like almost be really good at it from the beginning to see like it's like the person who was working the sell order on Palantir today was very good. It wasn't like he just showed or she showed a million shares on the offer at 63.20 and then oh hey everybody there's a million shares here on the offer at 63.20. It wasn't that way. It wasn't even like she had a million share sell order at 63 quarter and was gonna refresh it to try to hide the size, but just put the entire order there and never moved it. These good, and I don't know if it was a robot or a person, but these like really good execution traders these days are very good at disguising how they work the order. So it was never like all at one penny, but the selling up there became very, very robust. And I first noticed it like 63.24, 63.25, 63.26. And it wasn't always all at the exact same price. It was just the way they started taking the offer up there without it lifting. It was consistent. It was refreshing. It would lift a little bit to let the stock bounce a bit and then kind of come right back in on the offer, which that's a good job, I think, of a human being or a robot working a large institutional order where you're not fully showing your hand because at a certain point and we actually saw this occur to some degree at 11:30, which I'll get to in a minute. At a certain point the market begins to read the sell order flow that's there and start to trade around it. How do they trade around it? Well, they can front run it, they can sell in front of it, they can front run it, or they can put buy stops for continuation above where they see the selling, figuring um, once the seller is gone, then the momentum can continue, and you want to only buy after that seller is gone. So new longs can come in, or sellers will front run that order, and then maybe if it's a short seller, put a stop right behind it. So like if you saw a seller at 63.25, you could short 63.23 and put a buy stop at 63.26 and risk 3 cents. That's some of the stuff that I used to do 15 years ago. I would see again they weren't as sophisticated. You would see that seller at 63 quarter usually showing size, maybe sometimes refreshing. And if it was a refreshing seller, you could just short 63.23, put your buy stop at 63.26, and if the seller finishes his order but the buyers are strong, you get blown out of the position as the seller's gone. But if the seller just stays there at 63.25, eventually the stock pulls back a little bit and you can make some quick money off of that. That's not how it works anymore. um they'll they'll pull the offer, let the stock pop, sell it potentially at a higher price if they can, or come back at the previous price that they were at, cross the market down, hit all the bids to also get some selling done, and then go back to sitting there. So that's kind of what this person was doing, but it was a very, very significant amount of selling. I first noticed it at 63 quarter. I shorted a lot of size like right in front of that, like 63.20 or better. I forget exactly. And then it actually popped above that real quick. And I didn't stop myself out of that size I took because it was mainly because honestly it was so extended. I don't like to buy out into extension. Um, but also just to kind of continue to watch it for a minute. Though at that point I had to be careful because his pop was up to 39 cents. Now I'm 15 to 20 cents out of the money on a much, much larger position of what I just added. And then finally, the sell came in, and then a little bit of a bounce, and then I started very consistently seeing this thing come in at 63. And at a certain point up here, I tried to highlight it to the team and the VTF at this when it was kind of riding into it for 20 minutes so that traders could type it up and watch it. But you can still see, even with all these highs, like this high at 955 is 04. This high at 1030 is 05. The 1040 high is 63 on the dot. The 1045 high is 6304. So the seller is very clearly there. I can read it, but sometimes it would just like we have at least I have hotkeys that are page up, page down that can move my limit orders by like a penny. So at a certain point, it's like, all right, I'm gonna page up a few pennies and I'll start selling at 04 instead of at $63 even, and hoping that like buy stops go off that sell right into me at 04 that I can then, get a larger chunk of my order done at that point. At the same time, the buy algorithm, whatever the heck that thing has been, that's been driving Palantir up insanely. Maybe some of that's coming from large order option flow and a gamma squeeze, or whatever's been buying this thing up, that also created this ascending wedge here. You can see that there's this very clear ascending wedge. It's a bullish pattern. Was still there. So it was really interesting, and that's when I communicated it at like whatever time this was, at like 10:30 plus, to watch how this seller was there, but the buy demand that has been there every day and that was trying to ride up on this moving average that we've seen be so powerful hit the point where this thing tightened up first here and then tightened up again here, where they're just buying right into this seller, and you'd get like a quick flash down and then it'd be right back up because that underlying bid was so strong, buying right into the seller over and over and over again. And I'm watching the stock, and sure, I have a bias on who wins because I'm very short. But watching the battle between buyers and sellers take place right in front of my eyes, and I was of the opinion that the seller seemed so big and so strong to me that I thought that the seller was eventually going to overwhelm that buy algo that's there. And then markets work in feedback cycles. So at a certain point, if you can break down to a spot where whatever that buyer was who's been buying up this thing then has to starts being out of the money, then you can start to get like a bigger pullback because markets work in feedback cycles. So that was incredible. And then created another higher low off of a 15-minute correction at 11:05. Got back up to 63 again. Now I'm getting nervous because you know there's only so much that the seller can sell, right? Eventually, that seller might break. Um, so another higher low into that seller, but I continue. I kept shorting. I shorted 62.99, like thousands of shares, multiple times today. And some of that I was just covering really quick for like 10-15 cents profit. Others of it I was holding for bigger moves. I had like this really big core position that I shorted at 63.25 or so. I didn't fully cover that until like 60-13 or something like that on the downside. But I was taking these really big ads that I was then covering relatively quickly just to try to put more cash in my pocket in the process. And then the big one was really here at 11:30 when the seller lifted really quick, and like it just the buying like exploded to the upside, like, oh my god, the seller's gone, shorts are squeezing out, longs are coming in. And then that seller came right back and jammed the whole thing down again. And then that was it. Finally, we broke the uptrend. We broke the algorithm that's buying on the moving averages. And then this thing it stayed weak the whole rest of the day. It didn't matter what the market did. It kind of continued its grind down. At certain points the market was rallying, and I felt that the stock was holding in better than it would have otherwise just because the market was holding in. But this thing never regained its strength. So it turned into a really good intraday trade. It was a big focus for me. I traded a lot of volume of it. And we'll see. It closed a little bit off lows. Is it up more after hours? It is. It is up a bit after hours. So it closed a little bit off lows, but basically closed with a big upside tail, and we still have a good amount of extension on the daily. So let's see if we can get a move in this thing to somewhere between 56.50 and $53. I think is reasonable after what we saw today. Or maybe tomorrow the buy algo comes right back in and the seller is gone. But someone was unloading a massive amount of stock up there and utilizing this volume to be able to unload it. And whoever that was, whether it was a robot or a person, was doing it, I thought, very masterfully. But I was still able to read it, and that information gave me the conviction to be on the opposite side of a short-term bullish technical pattern here to look for the failure of that pattern, and it paid. So that was a big focus today for me. I guess that's all I got. I am happy to talk about whatever you guys have. From Mike Reed, I won't be able to listen live today, but if you have a chance, can you describe your understanding around the Nomura bit in Pat's note today about call skew between out of the money and at the money calls, and how that plays into the macro dynamics positioning? I'll do my best to take a stab at it. So Pat's note today. Um, Pat's note today, what you're referencing is this chart that comes from Nomura, and there's language in here that we can read. Just trying to. I noted the rapid call skew steepening witnessed since the election, describing it as a sign of left behind investors trying to catch a moving train through out of the money upside. The table below from Nomura's Charlie McElligott gives you a sense of call skew percentile rankings. We'll take a look at that chart in a second. You want to focus on the green boxes around the red shaded percentile rankings in the call skew columns. For the new or uninitiated, those rankings essentially tell you how extreme relative to history, and the look back for each ticker is in the rightmost column. Relative to history, demand for out of the money. This is the key line here. So it's telling you demand for out of the money upside versus at the money calls. The higher the percentile ranking, the greater the interest in the call wing and the more intense the FOMO. McElligott is describing this as a yellow flag, not a red one. And this whole portion of this note is very, very much worth reading if anybody didn't look at it. So then if we go to the chart here that comes from Nomura, you can see a lot of this stuff is highlighted red, and this is the 1 month call skew percentile and the 3 month call skew percentile. So what does this mean? Again, going back to the note here, it shows us basically demand for out of the money upside versus at the money calls. So when you have like this FOMO buying that's coming in, when you have like performance chasing that's coming in, and this sometimes can become a self-fulfilling prophecy in terms of gamma squeezes. Basically, what this means is compared to history, there are a lot more people buying out of the money calls right now than at the money calls. Why would people be buying out of the money calls? Well, they tend to be cheap and they tend to give you huge reward for the risk that you put on in the event that they work. And the reason why the risk reward can be so good is because the probability is usually not as good when you're buying, very much out of the money calls. But and I'm not a huge options trader. Maybe some people have better data than I do, and know where like Tesla options were trading. So Tesla's one of the ones, and I don't know. Let me go back to that chart really quick. Um, yeah, this is all index and sector um, categories in this. But I'm sure that similar you would see similar data in like certain individual equities. So just using like Tesla as an example, like I don't know what the answer is to this question. Maybe somebody does. But if you bought like back here on I don't know November 7th or on November 6th, right after the presidential election and Trump wins, if you bought on November 6th or November 7th when Tesla was at, $290 or under, if you bought $325 calls that expire this week, um, and then you're realizing those a couple days later at $350, what's the return on those? What like from a risk reward multiple perspective? I don't know the answer, and I don't know if anybody has that data, but I would assume that it's massive, as opposed to if you were buying at the money, you're not going to be making as much money. So basically, what people are doing here in this FOMO environment, they're recognizing that they're underpositioned. They are, yeah, it's a research project. Thanks, Bill. Um, they're chasing upside by buying what would traditionally be lower probability but really high reward potential out of the money calls. So that creates this FOMO. And the really interesting part about it though is that for a big enough of a player, it almost could be like a self-fulfilling prophecy. And I think that that's what we're seeing to some degree with some of these stocks. I know, I think it was Brant at some point this morning said something like, "I want to know who the hell is buying Tesla at $340 or whatever, if it's retail or if it's institutional or whatever." And it's both. They're feeding off of each other. I think that there are players out there on the institutional level that are big enough and smart enough to understand that they can create utilizing these levered products, squeezes higher in stocks that become self-fulfilling prophecies just by nature of them not only buying those options, but then also by alivening the animal spirits of the retail world, the dumb money, the Wall Street bets people, which aren't always dumb money to be honest, but a lot of times they are, who then will chase things even higher. And what Gilbert just said here with the zero DTE stuff, that can even create microcosms of it in on like an individual day, which is obviously happening also. So, they know that if they're buying huge Tesla calls, who's most likely going to be on the opposite side of those huge Tesla calls is going to be a market maker. Well, guess what? Market maker does not want to be, you know, naked selling calls. They're going to immediately hedge that position. How do they hedge that position? They hedge that position by buying the underlying. So you're basically buying a levered product that then forces the um, the market makers to come in on the bid, squeezes it even higher, also then alivens these Wall Street bet chasers to create even more demand and buy the stocks up even further. So that's what was I think being represented at this point here in the note. And it's worth noting, there's a line in here that's also worth reading, where they describe it as a yellow flag, but I think somewhere on here that um, it talks about how eventually these types of moves kind of like fall victim to their own delta at a certain point. I'm just trying to see. I thought it was written in here somewhere. I wasn't prepared for the question. Sometimes when I bring these notes up, I already was prepared with what I want to say. Uh, the point I guess is, because I'm not seeing the line as I'm just eyeballing it. Why is this a yellow flag? Why can it eventually be a red flag? Is um, it can't last forever. Uh, you know, like, I mean, think about it just in terms of technicals. Like, what creates extension? We talk about stuff like this all the time. What creates extension? Momentum. What creates momentum? Well, momentum is a situation in the market where the higher the price goes, the more the demand becomes. That inherently can't last forever, right? It's almost like a rule of nature that at some point that has to stop. So when you have these calls coming in and they just feed on each other and feed on each other and feed on each other, eventually it just busts. Eventually it just breaks. Um, so at a certain point, those skews can get so big that they almost begin to fail under the weight of themselves. Um, which is the hard part about trying to be counter trend on parabolic moves. Like, why was I shorting Tesla a few days ago at that 350 area and really trying to lay into that position? Because I'm guesstimating as best as I can and then trying to manage my guesstimate with good execution and stop losses and risk reward and all that stuff, that you're getting closer to the end of that short-term cycle than the beginning of that cycle, because I know that it can't last forever. And the more extended it becomes, the higher the probability that you get closer to the end of the move than the beginning. But the flip side, we've brought these examples up many times in the past, is that um, uh, what you think is extended can sometimes become significantly more extended, especially when these types of dynamics are at place. You could have started shorting Tesla at 305 here and said, "Oh my gosh, it's a day three and it's insanely extended," and then that peak doesn't come in until 358. So you really, really got to be patient on this countertrend stuff when you know it's got to pull back eventually, but sometimes if you short too early, if your career is still intact when this thing is at 560, then you're just trying to manage the position around not losing money instead of actually making money, which is why patience on this stuff is so important sometimes, and you're better off missing some of the counter trend moves and being too early. I know for myself for sure, I have a habit of being too early. Where I make up for it is in terms of how I layer in size. Um, I have a habit of being too early on counter trend stuff. I know that about myself. It's something I've been working on. I've been working on being more patient. Pat is way better at it than me. Um, so I love when I get the Pat confirmation call on top of it. He's way better than me. But where I'm able to do well with it is when I'm way too early. My sizing is typically small enough that I'm not getting blown out or in a too bad of a position when that peak actually comes in, and I can recognize that peak and then really size up at the right time to the point where my increase in sizing is what actually pays me, where maybe the stock only even returns to where I first started shorting it, but I end up making good money in it just because of how the sizing of the position worked. So appreciate the question, Mike. I hope that helps. This is a big one here from Austin, but I think Bill might have given me some information, so let me take a look at that. Here's a Tesla skew in Delta. Normally puts should trade higher, and in general, a normal skew um, has a smile. Here you can see calls being priced higher than puts. And like you're saying, the skew can be thought of like a sports book point spread, which I know nothing about. As a dealer gets too much inventory, they have to jack up the implied vol price, and that is skew getting steeper. The market maker needs to raise implied vol enough that sellers come in and even out their inventory. Um, thank you for that, Bill. So, um, normally put should trade higher, right? And I remember, so sometimes you'll see that I think flip into these really big up moves. I remember on these Chinese names right before one pop though that the skew had like inversed also, and that was a signal where then like the next day we got like a really nice little pop out of it. But yep, thanks for the added information on Tesla there. From Austin. Please bear with me. It's kind of a long one. No problem, Austin. Today was wildly frustrating day. It's kind of the cherry on top of the past few days. Don't worry about the past few days. I went long SPY pre-market on the pullback. Let's take a look at the SPY. Um, I went long SPY on the pre-market on the pullback and pivot from the CPI pop. Pretty much nailed the entry only to have it fail and stop me out on the break of the pre-market CPI ignition bar at 10:05 a.m. So I assume that means, correct me if I'm wrong, you were buying roughly off like this 9 a.m. low or possibly this 9:10 a.m. low. I remember when I was doing the morning meeting and we were watching the pre-market price action, watching the SPYs and Qs pull back into this equilibrium area. I remember saying you can look for a pivot low to come in to take advantage of for a higher low for continuation off the CPI move. I probably should have done a better job communicating that I thought that there was a chance that they could fail this move today simply off of the fact that the number was in line. Though it did make sense that the market would be up. I was surprised at the degree of the reaction. But just technically here, this is what you want to look for technically. You get the big upside move. You don't want to be chasing on the 840 bar on the third upside bar. If you caught the move, great. If you didn't capture the move, don't chase. Wait for a new setup to come in. What does a setup look like? A setup could look like a bull flag. A setup could look like a technical pullback pivot low, where you're then buying off of that pivot low. It attempts to do that here at 9 a.m., pops a little bit, makes a new low, so fails, ticks off the 21 EMA, makes another doji candle, so another attempt at a pivot. That works a little bit through the pre-market, rest of the pre-market into the open, and then eventually that fails also. So the first thing that I would say here is that if you are buying off these pivot lows, that's probably what your stop should be. Probably not the 10:05 a.m. low, the 8:30 a.m. low. I mean, unless you have so much conviction in the importance of the event that you're willing to give some the extra room to risk not getting shaken out. I do that sometimes. I really think that the right stop is to again use the pivot low itself, get your risk covered really quickly into these upticks, and then stop yourself out when those lows are failing. If you trade that tight, there is definitely a chance of a shakeout occurring where you get shaken out of your stock and then the trade works without you, but the 8:30 a.m. low works. So I like to do a lot of times a combination where maybe if I have a lot of conviction, I'll be willing to give some down to the 8:30 bar low. If I don't have a lot of conviction, I won't do any. But even if I am doing that because I have a lot of conviction, it's probably going to be a bit of both. Because the benefit of using the tighter stop is that you can take more sides with less risk, and it only takes a smaller move to get your risk covered. So first thing I would say is that I would say assess if you use the right stop loss. If you nailed the entry off of one of these pivot lows in this equilibrium area, then that's probably what your main stop should be, and not the actual absolute low, because that wasn't your trade. You didn't buy in the 8:30 a.m. bar because you thought that the news was super significant versus that low. You're buying a pullback off into the equilibrium zone where you're looking for a technical setup for continuation. It's a different trade. Um, anyway, let me continue to read. Uh, so it stopped you out in the break of the 10:05 a.m. bar. So that's this bar here where we flash lower. Um, I wanted to give it some room and give it to the pre-market low. I hate the way this is going, but I don't want that to um, make you feel bad. I don't like this game of like choosing the wider and wider and wider stop loss because it's more like hoping than trading. I wanted to give it to the pre-market low, knowing that there was less likely to be a big pullback due to market positive gamma. But what percentage was the market down at the pre-market low? Like you get $7.5 billion worth of buying into a 1% down move, not like a 0.1% down move. Does it have an impact on smaller down moves? Yeah, it does. It's going to probably be an increasing impact the more lower you go. But I don't necessarily like that idea. So I stopped out when it broke the pre-market lows just to get chicken out and left in the reversal. And now here's where you're getting your own head. Because you got shaken out of the trade and now you're frustrated because the thing went up, and that I think misses the forest for the trees, or whatever the expression is. It doesn't matter that you got shaken out. It matters if your game plan was right and if your stop loss was right, and if you were just giving this a ton of wider room and because you were hoping, and then you got pushed out of the trade. Pretty much the same thing happened with Nvidia. It shook out. Um, Okay. I mean, Nvidia was much weaker throughout the day today. Uh, then BITX, you shorted at 125 at uh, 56.84. Which I think is when I started shorting. Yeah, so you shorted basically with me. I started around there also. What time did you just say? You shorted at 1:25 p.m. Yeah, okay. I like that price. I covered risk and then some, but stopped out at 1:55 p.m. That's not to turn away into a loser. Okay, great. That's great. It doesn't matter that it goes without you. This is where you're getting in your own head. So BITX, you shorted at 125. Probably got your risk covered in this down move. This one you kept tight, and then you got stopped out into this up move, and then the trade worked. Um, but you got your risk covered. You got a game plan. You stuffed yourself out. I like it. I like it. I stopped out of my Oxy long that I'd been swinging for quite a while now, just to watch that totally reverse. Yeah, that's got to be pretty frustrating. But this was earnings, wasn't it? You held the stock into earnings, so you gotta recognize the stocks trade crazy on earnings reports, and then anything can happen. Sometimes they reverse, sometimes they die, sometimes they move higher. This thing was not trading well this morning compared to the XLE, compared to Chevron that I was in. I know that they downticked as well also this morning. Um, anyway, uh, so my question is this: I know you're always saying to manage your risk, but also don't stop out till you know that your idea was wrong. To me, I put my stop where the chart tells me that I'm wrong. If it goes against that level, but maybe I'm missing something here. I just can't seem to ever juggle these two things, and very often I get shaken out. It seems like I always make the wrong choice when it comes to stopping out at the level or waiting till I know that my idea is wrong. Yeah, I see what you did there because it's like on the SPY trade, you're trying to give it a lot of room, and then you get pushed out giving it a lot of room. Whereas like the BITX trade, you're keeping really tight, and then you're getting shaken out of that one, and it kind of works. So let me just read the last two sentences here. I don't know when my idea is wrong, other than price going against the level. That's the problem. How do you juggle these two concepts? And I'm pretty much already sized down as low as I can go. Okay. So yeah, so some great questions here, and even if I'm being a little hard on you in certain points, I really appreciate you bringing it to the table so that we can all review and all improve as traders, and you first and foremost. Hope we can help you get through this issue in terms of your stops. Um, it is a really difficult thing to be totally honest with you, and the first thing I'm going to say is not going to help you at all, and I'm just being real. Uh, Part of what you're describing is part of the reason why this is not a recommendation. I just always have to balance between what I think is right and what I do. Part of what you're describing here is part of the reason why I oftentimes don't use hard stops anymore, and I manage positions to areas. For me, it's become a better form of trading overall, because I can manage the trade to the area and not have a specific stop loss where I don't risk getting shaken out if I don't have a stop loss. But what I risk is getting absolutely run the heck over if I'm wrong and a position keeps going against me and against me and against me and against me and against me. So um, that doesn't help you at all, but it's being honest. For you, you need to figure out what your trade is, what your motivation for that trade is, and what the other factors are behind that trade. So for me personally, and the Bitcoin ETF is a tough one because it's so insane. But just talking technicals here and talking charts, the way that I would view these trades, and I would view them based on all the information that's present, is I would have traded them opposite. The SPY trade that you took is a trade that I would look to keep tight versus these tighter stops like I was describing. Whereas the Bitcoin trade, if I can afford to do it, if my sizing is appropriate, I actually want to keep much, much looser and, trade more versus the level than necessarily have a perfect stop loss in. Or if I am going to have a stop loss in, it's going to be a little bit of a looser stop. Why? Because for me, the other information that's present in the trade. And that's what I'm kind of basing my game plan on. The SPY long trade that you have on, first of all, I think it's hard to get a lot of follow through in either direction in the market, which I know is the reason why you wanted to keep your stop loose to begin with. Um, but you're kind of taking a technical news trade here off of a news event that I don't think is particularly significant. And for me, that's important. That's where the fundamentals, when I describe myself as like 15% fundamentals in my trading, that's where the fundamentals come into play. It's not necessarily always studying balance sheets and PEs. It's managing news, and understanding the significance of news. So the trade here that you're taking is a technical trade. It's an equilibrium pullback pivot low trade that you're trying to grab into. Um, and for some traders, they might just say, "Hey, the technicals are enough." and I'm trading off these pivot lows. Technicals are enough, and that's all I'm doing. For me, I like to understand and create a thesis around the news event. The thesis that I created for myself around the news event is that it was not particularly significant because it's a fully inline number. But if there was going to be a move to either direction, it should be to the upside, just because of a relief of event risk, if for nothing else. So not overly significant though. So for me, that means that this is going to be a trade that I will not have so much conviction on that I want to give an absolute ton of room. Uh, so I want to keep that tight. And if I am going to give it a lot of room, then it's an entirely different trade at this point. I'm not giving it to the 830 bar low. I'm not giving it to the pre-market low. I am giving it um, no stop loss initially and willing to build in. If you're telling me you want to trade off the positive gamma that's in there and the thesis of the fact that we should be able to go sideways, should stay range bound and eventually break out, then I'm not using a stop loss at all. I'm going to build all the way in until the market proves to me that my idea is wrong. Doing it with very small initial size. I mean, heck, you could do it with one share. You could buy one share in the spies every 25 cents or 50 cents or dollar or whatever, and just build all the way in, and until the idea proves that it's wrong, or until we get through this week and we get an actual failure of the flag, or whatever it is. So that's how I'm doing it. I'm most likely keeping it tight because I'm trading, like I said, off this specific event, or what I just described as a different trade. It's not just a pullback to the equilibrium zone on the pre-market chart. It's an entirely different trade that then becomes based off the big picture. So that's the only way that I'm keeping this loose is it becomes an entirely different trade. If I'm just trading the small time frame technicals, which is what you did, then the stop loss is based off the small time frame technicals, which is those pivots. When it comes to the BITX trade, I see what you did here. You shorted 1125. I'm not sure if it was like off this inside five and down, or if it was off the pivot at 120. I assume it's off the pivot at 120, and then you're breaking lower. This pivot at 120 is not significant. Is the first thing I would say. There's no upside extension on the 5-minute chart. There's no big upside tail here. It's not significant. The trade for me on this trade was sure. I'm noting these pivots. I noted this little bit of a lower high that came in here versus this high. I'm noticing those, and maybe you could have tried to short versus this high, in which case you would have gotten shaken out. Um, the trade here for me is day three to the upside in an ETF, and I know it's a levered ETF, but an ETF at that point that's trading at $56, the 80 EMA at 44, and the 21 EMA at 38 on a day three to the upside. So for me, this became a trade where I'm not trading this with a stop loss. I am trading this to manage the trade to some degree versus that 80 EMA. Um, though my target on that is actually much tighter than the 80 EMA on the daily. And I'll manage the extension if this trade continues to move against me. I'll build in, I'll get heavier, I'll do more of what I did with Palantir, where I suffered in Palantir here for a couple days, and then all of a sudden was able to really capture it, you know, today, because I'm managing versus that extension while I'm watching the trade, and that's why for me my BTX sizing was never massive and out of control. Yet it was actually like my best name on the day, or one of my top three names on the day was BITX, even with not huge size, because I caught a pretty big move to the downside from where I shorted. Um, but I'm also taking this trade in such a way where I'm managing it off of this extension, and I'm going to build in. And for me, part of it is I know I can afford to build in, which that's the hard thing when I'm working with traders, and I don't think that you're yourself able to do this. But again, I just want to be honest as we try to find a solution for you on what I do in certain situations. Is if I find myself down $10,000 in BITX, I'm not panicking at that point. I'm managing the trade, and not even necessarily concerned if it's still moving against me. Maybe I'm concerned. It depends what it looks like when I have this degree of extension, because of course I don't want to get caught if this thing goes to 75 before that actually comes in, which it could. But I'm gonna manage the trade. Um, so I think the biggest thing for you with what you're describing here is know the type of trade that you're in. I think that that SPY trade was very, very different than this BITX trade. I think that the only reason that you're even frustrated by this BITX trade is because it worked without you and because of the other trades that you already had happen to you. When the right thing to do is to say to yourself, did I trade this with a good game plan? I would argue that I don't love your game plan on this trade, but did I trade this with a good game plan that can give me consistency over time? If you had everything else work out fine for you and then you had a break even trade in BITX, you're not going to be upset about it. It's just everything is coming together for you all at once, and it's reasonably upsetting because that's just how human psychology and human emotion works, where we don't live in a vacuum mentally where it's one thing is different from the next, is different from the next, which is the right way to think about trading. We live in a world where stuff mentally compounds, right? So you're looking at BITX then going down to $53 with you having no stock and a P&L at zero. And it's always the wrong thing to look at what a trade does, I think, after the fact, and let outside of studying it to see if your game plan and the actual trade game plan that you had was correct to begin with. Doesn't matter what a stock does after you get stopped out of it. Um, but I basically think that's what it comes down to. I think that there's some room for improvement in how you're managing those stop losses. Your time frames are all over the place. I don't like the SPY stop loss versus the BITX stop loss. It doesn't seem like it's a consistent approach to me. You're giving one thing a lot of room, but that's not what your initial trade was based on with the entry. The other thing that you're keeping really tight on, though I'm not really sure what the reasoning behind the entry was. I assume it has something to do with the little lower high combined with the daily chart extension, but in which case, this is probably the one that you should be giving more room to, and SPYs are probably the one that you should be giving less room to. And on top of it, your frustration from the Oxy earnings report is an entirely different situation. This is an earnings report. You held stock into an earnings report. Stocks trade crazy on earnings report. They do crazy reversals. They have crazy gaps. They have big moves up. They have big moves down. I can't tell you, I've had several occasions over the course of my trading career where I've held a stock into an earnings report and it's gapped 30% against me because of that earnings report. And I'm stuck in the position trying to manage it. Um, Getting totally screwed because that news came in. Stocks do crazy things on earnings reports. You can't let the fact that you held a swing trade into an earnings report and it did something crazy impact the way that you then feel about like a BITX day trade. You have to be able to compartmentalize these things. They have to be completely separate to one another. Just assess whether or not you have the right game plans. That's the most important thing. So tomorrow when you come in and you start trading again, you can't let any of this affect you. You have to come in, you have to do the right thing for the trade. And, I would encourage you to do your best and um, maybe you already are, or maybe I missed it. But do your best to communicate what you're thinking when you enter that SPY trade to begin with. Or hell, BITX, and again, maybe you communicated it. I definitely miss things in the chat in the VTF sometimes just because I'm so actively trading myself and doing 20 things at once. Let me know that you're in this BITX with me if you're in it with me. Let me know what your game plan is for the trade. Let me know what you're doing. Let me know where your stop loss is. I can give you feedback on stuff as best as I can. Same thing with the SPY. Let me know what you're doing. Ask about what you're doing. I definitely could have told you at the time that I don't tell traders what to do, but I would be like, I don't love that. I don't think that that's the right. You're just giving it a whole lot of room here, but you're not doing the daily chart trade that I was talking about. You're trading a 5 minute news continuation setup. So use a stop loss for a 5 minute news continuation setup, not a stop loss for a positive gamma market environment, big picture bull flag build out trade. They're totally different trades in terms of the playbook. Um, I hope that helps. I don't really have anything else for you in terms of feedback on that. I do hope it helps. Tesla 325 calls the white lines. It's an interesting chart. You get some really cool charts, Bill. I'm gonna take a look at that later. Um, yeah. Uh, just trying to think about your last comment there. Sometimes you don't want to communicate because you don't want new traders to follow you because you don't want them to get hurt. I would say generally all information is good information because it's going to help you and will help other traders. Like I don't think that your first buy trade was a bad trade. I think it's like a nice B minus continuation setup there. Certainly not an A plus, or not something I would want to risk a ton on. But I actually think that your trade was a good trade. So communicate the trade anyway, and then we can try to figure out how to trade it right. And they're look, we have traders here in our room of varying skill levels, experience levels, knowledge levels, size levels, account size levels, stuff like that. To some degree, if you're a newer trader on the team, I don't. I'm trying to figure out the right way to say this. Part of learning our community is maybe learning who the best people are in the room to some degree. Not saying that you're not one of the best, Austin. We can if you're not currently, we can try to get you there. But if you're newer, you kind of want to learn. You know, like who the better traders are and who makes sense for you to be involved with. Like even myself, like I'm probably one of the better traders in our room, but you don't necessarily want to follow me either. And that's one of the things that I'm honest about. Like I think that the virtual trading floor is more about information sharing than it is about trade following. Sometimes it can be like somebody brings a name to like Coin today. Coin really was not on my radar. I had too much going on, and then someone alerted to me the fact that Coin was at 328. I was like, oh, Coin's at 328 or three. It might have been 330 actually. Exactly what Bill's saying. Somebody just alerted to me that Coin was at 330. I wasn't blindly following that trader in the shorts. I don't even know who did it, but I wasn't blindly following that trader short in Coin. But the fact that that trade provided that information, put it on my radar. I go, oh wow, it's a 330. I already know that this is somewhere that I want to short Coin. I already know that I want to be shorting Coin around 330. Thank you, whoever it was, for letting me know. Bam, I just whacked some. I'm in the trade. So just communicate the information, and then traders got to make their own decisions. They shouldn't be blindly following you, Austin. They shouldn't be blindly following me either, because like I said, I'll sometimes do things with my own trading that makes sense for me that might not make sense for you and your account size and everything else. No one should be blindly following anyone. It's just getting the information out there, knowing what people are looking at. That provides more potential opportunity for everybody. So I think that's the right way to say it. All right. Um, for Mehdi, thoughts on Levi for a swing? Looks good above 17 quarter. Yeah, building out a base off 1675. Okay. Yeah, I like the idea. Long through 17 quarter, stop loss at the 1675 area. The tail here extends down to 1662. That was all the VTF. I haven't looked at the YouTube. First question in the YouTube is from Robert. What was your morning thoughts process after the CPI print? Kind of mentioned it already, but I can mention it again. The CPI was in line. I found it to be unimpressive and uninteresting. But my thought process was that the risk of that is to the upside for two reasons. One is anytime you just get through an event, you lose the event risk. So that inherently is bullish in this case. And two is if there's any degree of fear of inflation picking back up that could negatively impact the market, like we've been talking about with the TLT and the dollar, an inline number helps to satisfy that fear a little bit. So I thought that the move should be higher on that CPI, but it wasn't something that I was like excited to trade to the long side. And I thought that this initial move up was overdone. For what the news was, makes sense to uptick a little bit. I did not think it made sense to uptick the degree to which we did. The point where you're actually just reminding me, I took like a bigger QQQ short on the third 5 minute bar up that was just a quick scalp down on it. That paid me just because of that thought process, and there was third 5 minute bar up and a lot of extension on news I didn't think mattered that much, and same deal. I'm like, I can manage this to the ADMA on the 5. Thank you, Cyril. From Robert, would you also say that Palantir 1130 shakeout was on purpose from the market maker to shake out retail traders who shorted the previous pivot point, or was it really driven by one of the strong sellers? I don't think it had anything to do with the market makers. I don't think that market makers try to shake people out even at all, to be honest. I think that there's algorithms that are out there that try to do that, but they tend to not want to have those algorithms that are working when stocks are trading with really high volume, and Palantir was trading with really high volume because it's more difficult for them to kind of manipulate those stops, for lack of a better term. I just think that the seller released his or her offer for a moment, let the stock rip, and jam down through the bid to be able to sell a lot of stock. Um, Good book for start recognizing your mental patterns and learn yourself to work with your own brain. Oh, probably for Austin and for everybody. Robert here in the YouTube is recognizing a book where you can begin to recognize your own mental patterns and learn yourself better, for the mental side of trading. It's called Thinking Fast and Slow by Daniel Kahneman. Daniel Kahneman. Thinking Fast and Slow by Daniel Kahneman. Cool. Got through everything there in the YouTube. Back over to the VTF. Is your target for the short still a catch-up trade? Generally, yes. Um, Generally, I'm just looking for a move to the ADMA. With the indexes and with Palantir, um, at a minimum, I'll be covering a lot of stock there. At a maximum, I'll be covering all my stock there. Uh, may choose to adjust to cover a little bit less if I feel that some of the other stuff that we've been talking about has been getting out of control. The interest rates and the dollar. This market should break out. It really should. I mean, just $6 billion per day in demand from corporates alone. This market should break out. It's not impossible for selling to overwhelm that if the market has a real currency scare or interest rate scare. Some of the bigger mini black swan events I've ever seen over the course of my career, not saying that that's what's going to happen, have been a result of currency scares. We just had one in August. It's when these currencies or interest rates move too big too fast and people get off sides and things can happen. It's not impossible on a really big interest rate or dollar move to see a mass quick liquidation of equities. I think it's a outlier probability. Um, but it is something I'll be looking at as we correct. So yeah, um, that's what I'm thinking on my shorts. So really just looking for this move to the ADMA. There's a good chance that I'd love a little bit of a gap down in the IWM tomorrow, because I am still long TZA. If I get a little bit of a gap down in the IWM, if I get this TZA up to 11 quarter or so, I'm probably going to dump a lot of that position. Maybe not all of it, but I probably will dump. I'm guessing. I gotta see what I decide to do in the moment. But I probably will dump at least half of my remaining position into the ADMA for the IWM if I can get a little bit of a gap down in the Russell tomorrow and gets me right to that ADMA. So I'd like a little gap down tomorrow. A little gap down tomorrow would be great. I would really be able to take some sizing down in a couple things, but we'll see. A lot of times I don't get what I want. back over to the YouTube. What do you think about shorting arm through 135? Semis have been weak. I like it. I like it. Uh, but don't like shorting as much with how strong the market is. Plus, it's close to the 200 day. Yeah, my biggest concern on any continuation shorts is definitely the market. So you're thinking correctly when you're thinking about your layers of probability that the market could be against you. The stock looks weak to me though. It's already starting to break down. There's no level there. I don't think I would want to chase extension on that break though. Like if it happens tomorrow, it'd be like a day four to the downside, and it's not super extended, but it's a little bit extended. So you're kind of shorting a day four to the downside through a level when the market itself is pretty strong. It might be a tricky execution if it were to happen tomorrow. But broadly speaking, I like the relative weakness. I like shorts on breakdowns as support. This chart does not look good to me. A lot of these other semiconductor names outside of Nvidia have been getting beat up. We do have Nvidia earnings next week. It seems like Nvidia in some ways is like the last stronghold of the semiconductors right now, and they're just taking money out of semiconductors to buy, I don't know, space, to buy Bitcoin with. I don't know. Choose your piece of crap. Um, so we'll see. Hope that helps. All right. Good long afternoon meeting today. I hope everybody's learning. Hope everybody's improving. Hope everybody had a decent day today. Have a great night. I'll see you all tomorrow.